Here is a realistic scenario. A homeowner in Ontario reduces their home insurance premium from $2,400 a year to $1,700 without switching insurers, without renovating, and without any special negotiation. 7 actions, 2 of them take a phone call, 1 takes 15 minutes online, and I've spent nearly a decade as an insurance underwriting analyst in the Canadian insurance industry. And what I can tell you is that most Canadian homeowners are paying a premium that reflects their initial policy setup, not their current risk profile, not the current market, and not the improvements they've made to their property since they first got coverage. The 7 actions in this video are the specific steps underwriters know can lower a premium. They are not discounts your broker applies automatically. They are things you have to do yourself. Most homeowners never do any of them. By the end of this video, you will know all 7 and exactly how to act on each one. Before I walk through them, I want to explain why these actions are necessary at all. Your home insurance premium is not calculated fresh each year based on your current circumstances. It is recalculated based on whatever information your insurer has on file. And that information is often years out of date. If your risk profile has improved, new roof, better credit, no claims, that improvement only translates into a lower premium if someone tells the insurer about it and asks for the adjustment. That someone has to be you or your broker acting on your behalf. The 7 actions below are how you make that happen. Way 1. Compare rates at renewal every single time. The single most effective thing you can do to lower your home insurance premium is to get competing quotes at every renewal. Not every 3 years, every year. Most homeowners auto-renew. The insurer counts on this. Insurance pricing is not a fixed market. Different insurers price the same property differently depending on their current book of business, their reinsurance costs, and their appetite for your risk class. A quote that was competitive 3 years ago may be 20 to 30% above market today. The 60 to 90-day window before your renewal date is when you have time to run a proper comparison and switch cleanly if a better rate is available. I've put a link in the description to compare rates from multiple Canadian providers in 3 minutes. Way 2. Increase your deductible. Your deductible is the amount you pay out of pocket before your insurer covers a claim. The higher your deductible, the lower your premium, because you are absorbing more of the small claim risk yourself. Moving from a $1,000 deductible to a $2,500 deductible can reduce your annual premium by 10 to 15%, depending on the insurer. On a $2,000 premium, that is $200 to $300 per year in savings. The calculation is simple. How often do you expect to file a claim below $2,500? If the honest answer is rarely or never, and for most homeowners it is, then you are paying for coverage you are very unlikely to use. Raise the deductible. Bank the difference. Way 3. Request a risk profile re-rate. When your insurer originally underwrote your property, they assigned a risk tier based on the information available at the time. If anything material has changed since then, you replaced your roof, updated your electrical panel, replaced polybutylene plumbing, your premium may still reflect the old risk profile. Insurers do not automatically monitor your property for improvements. A formal request to your broker to re-rate your property based on current conditions can capture savings you are currently overpaying for every month. The phone call takes 10 minutes. Ask your broker to confirm what property information is currently on file and whether any recent improvements would qualify for a re-rate. Now here is the action that surprises most homeowners because it involves something they thought was always in their interest to do. Way 4, think carefully before filing small claims. Every claim you file stays on your insurance record for 5 to 7 years. The financial math often does not favor filing. A $3,500 claim minus a $2,000 deductible leaves $1,500 in insurer payout. A 15% claims surcharge on a $2,400 premium for 3 years costs $1,080 in additional premium. Net benefit of filing $420, and that assumes the surcharge lasts only 3 years, which it often does not. For any claim under $5,000, run the math before you file. Saving your claims history for large losses is one of the most underused premium levers available. Way 5. Right-size your contents coverage. Many homeowners are paying for $200,000 of contents coverage when a realistic replacement of their actual belongings would cost $80,000 to $100,000. Reducing it to an accurate figure can produce a meaningful premium reduction without leaving you exposed, because you are only reducing coverage you were never going to need. Compare the stated contents limit in your policy against a realistic inventory of what you own. If the gap is significant, call your broker and request an adjustment. Way 6. Improve your credit score. In parts of Canada, some home insurers may ask to use credit-based insurance scoring as one factor in their pricing model. A meaningful improvement in your credit score, 50 points or more, can move you to a lower pricing tier at your next renewal. The premium impact compounds year over year. The 3 highest impact actions ensure your payment history has no missed payments in the last 24 months, reduce your credit utilization below 30%, and do not close old accounts that contribute to your credit history length. I've put a link in the description to check your credit score free. Way 7. Get a second broker quote every 3 to 5 years. Different brokerages may have access to different insurer markets, different underwriting contacts, and different appetite at different times. Getting a second broker quote every 3 to 5 years ensures you are seeing the full picture of what is available to you. Every 3 to 5 years, ask a second broker to quote your property cold. If the new quote is materially lower, you have options either to switch or to take the competing quote back to your existing broker and ask them to review their pricing. Your home insurance premium is not a fixed number. It is the output of a set of inputs: your property's risk profile, your claims history, your credit behavior, your coverage limits, and how aggressively your policy has been shopped. Every one of those inputs is something you can influence. The homeowners who consistently pay the lowest premiums treat their insurance file the same way they treat any other significant financial contract: actively, deliberately, and with an annual review. Here is how to start. Today, call your broker and confirm what property information is currently on file: roof age, electrical type, plumbing type. If anything has been updated since your last underwriting review, request a formal re-rate. Before your next renewal, run a rate comparison 60 to 90 days before your renewal date, not the week before. This year, review your contents coverage limit and compare it to a realistic inventory of what you own. If the stated limit is significantly higher than actual replacement cost, ask your broker to adjust it. Ongoing, check your credit report from both Equifax and TransUnion once per year. Look for errors. Address the highest impact factors: payment history first, utilization second. At your next renewal, if you have been with the same broker for more than 3 years, get a cold quote from a second broker and compare. 7 actions. Compare at renewal. increase your deductible, request a risk profile re-rate, think before filing small claims, right-size your contents coverage, improve your credit score, and get a second broker quote every 3 to 5 years. None of these require a specialist. They require knowing that your premium is not fixed and deciding to treat it accordingly. If you found this useful, subscribe. I publish one of these every week. Everything I cover comes from nearly a decade of working inside the Canadian insurance industry. I've put links in the description to compare home insurance rates and check your credit score free. If your renewal is coming up in the next 90 days, both are worth doing this week. See you next week.